Kevin Hincks is with me, co-host of Fast Market Live at the CBOE. Good morning to you, Kevin Hincks. Thursday, we're making it through each day, lots of news, and in this case, we see the futures in the green. What do you think is driving this morning's action?
Good morning, Nicole. I think headlines are back in the news, right? News overnight that right around now, it seems like 9 o'clock Eastern, 8 o'clock Chicago, they're going to announce a trade deal between the U.S. and the U.K. That's the first. Remember, we've been calling for start putting trade deals on the board. We were wondering if they're going to do them all at once or individual. Well, it looks like they're coming out one at a time. And today, the UK, on the same day where the Bank of England cut their interest rates by 25 basis points to 4.25%. It looks like we're going to get a trade deal. A lot of good words, a lot of statements coming out. The Bank of England, Andrew Bailey, he's happy about this. We also got some economic data. Obviously, Thursday morning, we get the high-frequency data jobless claims coming back down into the 220s. Remember, a week ago, it jumped up to 241, now 228. So that's a better number, indicative of a strong U.S. Labor market. Productivity and cost, not a great number. Non-farm productivity down 0.8. That's worse than expected. Unit labor costs 5.7%. That's a little higher than expected. So that secondary or actually third tier economic data, not great there. But the high frequency data, the jobless claims, pretty solid. Really good news, it looks like, coming out from the UK, and a market that rallied off Jerome Powell's comments. Remember, it started on the downside, but I believe around 2:50 Eastern time when Jerome Powell said, there's risks to the unemployment rate. There's risks to inflation, but those haven't materialized yet in the hard economic data. I think the market rallied off of that comment. And overall, we're looking at a higher open to start the day on some good headline news. Nicole?
Yeah, I mean, that's the point, definitely. I mean, a lot of afterthought on what Jay Powell said, didn't say, trying to read into it. We're still looking for rate cuts over the summer. Most folks are still saying 2 to 3 cuts. I see the September and October above 90% likelihood, but July 65%. So that doesn't scream that we'll definitely get the rate cut. Also, we saw Bank of England, as you mentioned, got their rate cut 25 basis points. What's the big picture here? I mean, I saw yesterday Goldman Sachs talking about recession. Folks are still thinking there's a possibility of recession, but that it'll be short-lived, and they don't seem particularly worried of some catastrophic moment.
Well, remember, as you deal with the markets and you deal with the economy, there's always a risk of inflation, right? Someone said to me, well, there's a 25% risk. There's always a 25% risk. So if trade deals are getting better, if interest rates are coming down, that will spur housing. I mean, these are not, unless you see an unemployment rate that goes to 4.5, 4.6%. Remember, Jerome Powell, one of the first things he said yesterday was discounting the GDP report as skewed because of the pulled import data that they got, a 41% jump in imports. That's what skewed that number. So he discounted that right away. Scott Bessent said he expects that number to be revised higher. So there's a lot of good things coming. Remember, Jerome Powell, what he said in essence was, the U.S. economy is doing extremely well. What he's worried about, how many times can one Fed chair in one press conference say if? Well, if this happens, and if the tariffs go, and if, well, it looks like today, if is turning into may not happen. So I think if that uncertainty that surrounds what Jerome Powell is doing, why he's hesitating, all those ifs, if that starts to dissipate, that's much better for the markets. I think that's what the market is reading into that. If these start coming every 1, 2, or 3 days, if we start getting more announcements, they're just going to pepper this market with good headlines, Nicole.
Yeah, and yesterday we had some good earnings that helped to propel the stock market higher throughout the day. I'm seeing right now some up arrows for those mega caps. the big, Mag 7 or whatever you want to call them. And in the meantime here, I think about the big picture and what folks are saying. They are looking to Bitcoin. That Bitcoin trend is still hot, which is interesting, right? That's approaching 100,000. But earnings in focus and guidance, I think that's still front and center. And I also saw more on Tesla and Apple and things like that. Any final thoughts?
I think you got to watch the Magnificent Seven, how they react. Google Alphabet, remember that sold off. That weighed down on the market yesterday, as did Apple. So let's watch how that flows through the day. And just watch these headlines. I think, there's going to be the media that's going to try and somehow reduce the headline that the Trump administration is finalizing a trade deal with the UK. Do they hint at more coming? Remember, we're getting to the end of the week here. Scott Bessement's going to be in Switzerland over the weekend. The UK trade deal probably going to focus on steel and autos. That's a good part because that's what they tariff on us. So I think you got to watch the market, watch the bonds and dollar and crude oil, watch the macroeconomic triggers. I think you've got good news to start the day. I think there'll be headlines throughout the day. I think it's a still tradable market, but at least to start the day, really solid headlines, Nicole.
All right, Kevin Hincks, great to see you, and I'll catch you later. Thanks, Kevin.